Hey everyone, it's John from Whatify. Big news this week. Adobe, industry player in all things creative and design, acquired Figma. Figma, if you're not familiar with it, is a design tool used by a lot of startups, independent companies there to do mock-ups, designs, UI, UX. They're a big up-and-coming company right now, and it's a huge acquisition, $20 billion Adobe buying Figma. $10 billion in cash and $10 billion in stock. So what are we going to do today? We're going to take a look at the deal and you run some what-if scenarios to see how long it's going to take for Adobe to recoup that $10 billion, their growth, churn, customer acquisition, and retention costs, and whether they're going to be able to make that money back or not. Was it a good deal? Let's find out. So right off the bat, some information. So historically right now, Adobe has a yearly churn rate of 10%, which is quite small. So that's a 90% customer retention rate. In this past given year, let's take a look at some quick numbers. You'll see they did $400 million in annual recurring revenue, and they grew by 100% in the last 12 months. So they got a great wicked pattern going right now. Bouncing back, how are we going to take a look at this? We're going to use Whatify. Whatify is a financial modeling software that allows you to have multiple what-if scenarios running in real time. So let's go high level here. We're going to start off by looking at their $10 billion in cash that was put into buying Figma. We're going to look at their initial user bases for Figma, their pricing. We're going to look at 3 different growth scenarios. One which is continuing the 100% trend. One which is something a bit more reasonable, which is the 50% trend. And lastly, we're going to do something dynamic, a little bit more realistic, that keeps that high growth rate, but over the next couple of years peters down to something a bit more realistic. We're also going to look at churn. So there's a 10% yearly churn here. So we'll see if Adobe is able to maintain that. Now here's a key point. A lot of Figma users, and there's a lot of press right now, are not fans of Adobe. And Figma's kind of been the anti-Adobe software. So there could potentially be a run on users leaving Figma for other tools like Sketch and some up-and-coming startup programs. Or is it all hot air? We'll find out. We'll look at whether there's a 2% churn in that growth for Figma and something more aggressive like a 4% churn. We'll do some revenue calculations, and lastly we'll look at what happens if Adobe keeps Figma prices the same or looks at increasing those prices in the ballparking 25%. So how does this work? Our software runs through every single one of these branches and calculates all of those scenarios. So we have 18 different scenarios that are all running here in real time, and you can use those to filter some best case and some worst case scenarios. So let's take a look at the best case scenario here right now. This is our top scenario here, which has, first and foremost, let's look at our users. So there's 4 million users of Figma as of January 1st of 2022, according to a TechCrunch article. If we look at our average revenue per user, they had $400 million with those 4 million. That works out to $8.33 per month per user. And they also have about a 10% cost of goods sold. So we factor that into our price point here as well, that for every license. Now obviously this is high level, and at a certain stage there'll be other economies of scale being able to bring things together, but we'll start with the basics here. Next up, we'll look at our user growth here. So right now we are modeling 100% month-over-month user growth. That 100% yearly boils down to 5.94% monthly here. Really important kind of calculation. Also in this thread, we're going to start with the best possible churn. So the churn here has the Adobe historical average of 10% per year, or basically 0.79 per month. And then lastly, we're going to stay and we're going to have the price increase here too. Let's actually take that off for a second. So I'm going to show you how our software works. I'm going to lock this event in for a second and then do some recalculating. So now we're seeing our best case scenario here with Adobe not changing any prices on Figma users. Let's also display our customer counts here and our customer growth and our income at the same time here too. So now we recalculate. So let's take a look at what this means. Looking at cash flow here, with prices staying the same, it looks like Adobe could recoup their costs by ballpark June of 2026 if all of these dream scenarios maintain the same. And let's be realistic. It's pretty unrealistic for 100% growth in perpetuity. So let's do something instead like locking in this dynamic growth. So what is our dynamic growth here? In this model, we start with still the 100% growth, and then we work this down to 80%, 70%, and this calculates up to 60% by June and July of 2025. So what does that mean? Let's lock this calculation in and then resort. So now if we have a more realistic growth pattern, and now it takes longer for that recoup, it's now more early January 2027, but we still have that favorable churn. Now what happens if Figma users start to churn? So let's take the lower of those two, that 2% churn rate. So we're going to lock that in. And now you'll see we've gone from the 18 scenarios down to a single scenario, which has even further out in time, April 2027, that return on investment group. So maybe this is the stage where Adobe decides to raise their prices. So we've modeled in a 25% increase on that $8.33. So we're going to toggle this back on. And now we can sort of see where that new value comes in. Let's make it actually really easy. And let's have those two scenarios with and without the price increase. And we can compare those against each other and see the timelines for those differences. Now, here's where things get interesting. Let's take a look at customers. In order for those numbers to hit, we need to get up to cumulative 55, 60 million customers for Adobe, even in this model where we're talking about having the higher churn and the growth rate. That's a massive number there. So this is where I invite you for some feedback here. What parts of this model make sense? What would you like to see? What's a scenario you think we should still be adding to this one? And what's one of my big misses? Is there something here that I'm missing in my calculations that's unrealistic? Looking forward to your comments below. Thanks, everyone.